Imagine a world where your regular smartphone can connect to 5G from space with no extra hardware. And that's exactly what AST SpaceMobile is building. Their BlueBird satellite network isn't just another space tech dream. It's already backed by giants like AT&T, Vodafone, and Google. And they just raised nearly $1 billion to make it happen. But here's the catch. This is still a high-risk, high-reward play. The company is burning cash, and the stock is wildly volatile, and execution is everything. In this video, I'm going to break down AST's bold strategy, financials, and real catalysts. And stick around to the end, because I'm going to show you exactly what I think will happen with this company. My name is Rick Orford, and I've been trading since 1999, and I help investors like you cut through the hype to make smarter, more confident decisions with your money. If you like this video and you're serious about growing your portfolio without making costly mistakes, be sure to like and subscribe. It'll help others too, and you won't miss out on future insights. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. AST SpaceMobile is a US-based satellite communications company building the first and only global cellular broadband network in space. And this allows simple devices like smartphones to operate. Its flagship product, BlueBird Satellite Constellation, is designed to fill connectivity gaps by providing global coverage without any special hardware. The company secured partnerships with major telecom operators, which led to a consensus moderate buy rating, thanks to the company's innovative approach and strong growth prospects. AST SpaceMobile is making headlines for its strategic developments. It secured a $43 million investment from the U.S. Space Development Agency and a definitive commercial agreement with Vodafone to extend its service across more than 20 countries through 2034. Also, the company has increased its cash position to nearly $1 billion thanks to the recent $460 million recent convertible note offering. But here's what really put the company into the spotlight recently. There's talk that Jeff Bezos may actually invest in AST. Bezos founded Blue Origin, a space technology company, and it's recently been hinted that an alliance could be forming between the two companies. And that's evidenced by a board member posting a photo with a caption that suggests that AST and Blue Origin are collaborating. And these developments and talks have helped ASTS to reach an all-time high, further attracting investors' attention. Now, let's see if the hype is reflected in their financial position. In the company's latest quarterly report, AST's revenue growth looks promising. But when you dig deeper, you'll see that there's a sharp decline from the previous quarter, and that offsets its year-over-year gains. And tracking this kind of volatility is crucial, and the one tool that I use to monitor these changes in real time is bar chart. And it's where you can explore the same stock data and analyst ratings that I'm referencing in this video. In any event, this type of performance is what I'd expect from a startup. The company also incurred a net loss of $45.71 million in their latest quarter, but it widened 27% when we compare it with the previous quarter. And a massive chunk of these losses stemmed from operating expenses, specifically an increase in engineering services and R&D. These investments are normal for a startup like AST. If the company plays its cards right, these investments could pay off in the long run. So with that in mind, let's have a look at the company's catalysts that can further boost its stock price, starting with AST's strategic partnerships. The company reported securing strategic investments totaling about $206.5 million from AT&T, Google, and Vodafone. And this will extend AST's reach by bridging the connectivity gap through 5G broadband services to the public worldwide. Second, there's the BlueBird satellite constellation, which is the company's bread and butter. BlueBird enables direct-to-smartphone satellite connectivity, offering 4G and 5G broadband services without the need for any additional hardware. And this technology aims to eliminate all of those pesky dead zones and provide seamless connections worldwide. For busy and developed areas, may not sound like a big deal, but AST projects revenue in the $50 to $75 million range in the later half of this year, as the technology is projected to get some considerable demand in some rural and remote areas. Third, AST has secured a deal for up to 45 megahertz of premium lower mid-band spectrum, the largest available block of high-quality nationwide spectrum in the continental US. And this will enable speeds of up to 120 megabits on their direct-to-satellite service. The deal is for over 80 years of access to spectrum held by Legato Networks, with $550 million in financing commitments and $80 million in annual payments. This deal secures AST's position to deliver high-quality and global connections from space. Now, investors who are thinking of AST stock should weigh the risks accordingly. The stock is up 108% year-to-date, all thanks to the possibility that Jeff Bezos may invest in AST. The stock has also pulled back a little, but is still up over 270% over the past year. So yes, with a stock that's up so much year over year, volatility is going to be expected. But here's the thing, if Jeff Bezos' investment actually gets announced, I expect the stock to surge significantly higher. Now, let's look at how AST performs when compared to its major competitor. The closest satellite player right now is Starlink, which is just one division of SpaceX. Now, this company doesn't yet have a technology that allows for direct connection of smartphones to its satellites, as its main product lines require a Starlink dish, and that caters to a different user. SpaceX is also a privately held company, so its financials are not public, nor can they be compared with AST. AST does have a long way to go before it can deliver on its tech promises. Investors must understand that it's a speculative growth stock, not some mature company or a dividend aristocrat. So if you're looking for short-term gains, AST is probably not the right stock for you. That said, if you have a long time horizon and you can handle volatility and you have a little risk capital to spare, then AST stock could be a speculative play. So yes, while some analysts fear that AST may have reached their peak, I see potential for massive upside for those willing to wait. But what do you think? What do you think about AST? Are you buying into their vision? Let me know in the comments below. And of course, if you found this video helpful, don't forget to like and subscribe. So that's what I've got for you today. Thank you so much for watching, and I'll see you next time.